Hello everyone and welcome back to the channel. In our last video we talked about debt funds, and in today's video we will talk all about gilt funds and its comparison with fixed deposits. Now let's get started. Gilt funds are a type of debt funds which invest in government securities. These funds invest in only fixed income generating securities issued by central or state government, which has a duration of medium to long term. These funds invest in risk-free debt instruments which ensures capital protection and moderate returns. These funds are considered ideal if the investors are risk averse and if you want to invest in government securities. Now coming to the characteristics of gilt fund. First, it's a type of debt fund which invests only in central or state government securities. Second, usually the duration of the sovereign bond is between 8 to 10 years and the average modified duration of gilt fund is between 5 to 7 years or more. Third, there is no credit risk as entire amount is invested in central or state sovereign bonds. Fourth, tax is levied only at the time of redemption, and the benefit of indexation is also available if the time period of investments is more than 3 years. Fifth, the NAV of gilt funds are declared on daily basis and hence exit route is easily available. Now coming to the difference between gilt and debt funds. The only difference between gilt fund and debt fund is that debt funds invest in companies which can have multiple ratings such as AAA, AA or even low rated companies, which requires investor to do a background checks for the safety of the investment. But in gilt funds, the amount is invested only in central and state bonds and hence is more secure as compared to debt funds. Now coming to the advantages of gilt funds. First, they invest in government bonds which makes them more secure than the fixed deposit of any bank. Second, post-tax return is higher than that of fixed deposit returns. Third, easy exit route is available, which means that you can withdraw the amount invested at any point of time. Fourth, even if compared to other debt funds, it is relatively more secure. They can be categorized at par with RBI bonds and PPF from security point of view. Coming to the disadvantage, the only disadvantage of gilt fund is that since the modified duration of gilt funds are longer, there is a risk of interest rate fluctuations. But the impact of such fluctuations is nullified at the end of instruments period. These funds are not advised if you want to invest for a short term. Now that we have understood the meaning of gilt funds, its characteristics, its advantages and its disadvantages, let us move on to understanding as to why gilt funds are a better choice of investment as compared to fixed deposits. On screen, you can see the example of returns of a fixed deposit in a public and a private sector banks. And we can see that the post-tax returns of 3.71% and 2.98%. And in the other chart, you can see the existing YTM of gilt funds, which gives post-tax return of 5.5% or more. Hence, in comparison to fixed deposits, they are not only more safe but generate more returns as well. Now that we have established that gilt funds provide more return than fixed deposit, let us also talk about the numbers of historical returns of gilt funds. Now, it is equally important to understand the historical returns of gilt funds. On screen, you can see the returns of various gilt funds which provide average returns of 10%. Now, these returns cannot be considered as benchmark as interest rates have decreased significantly in the last 2 years, but the YTM mentioned previously can be considered as benchmark, and we can see that the returns are much better compared to fixed deposits. Now, gilt funds are relatively a newer concept for the investors, and even distributors are providing limited knowledge and details about them as an investment option. Please let us know in the comment section below how you liked the video. Also leave your suggestions as to what would you like to see next. Like and subscribe to the channel for more such videos in the future, and I'll see you next time.